Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach with Schwab and delighted that so many of you are here live to kick off the first full trading week of the year. Of course, we did meet on Friday and we kind of laid the groundwork. We kind of went over, the 5 or 6 tips that I have for trading success. And then we placed 3 example trades on Friday. I have put a link into the chat. If you missed that class, you may want to go back and check it out. What are we going to do today? So onwards and upwards. So today we are going to look at, it's a new year. And sometimes we want to continue, with strategies that have served us well in the past. Sometimes we want to look at strategies we may not have used in a little while. But today we're going to do look at 3 trading strategies for 2025. We're going to do at least 3 example trades. And that's what we're doing to kick off the year. So I'm glad that you guys are all on board and joining us. So let's get through our important information so we can get right out to the platform. Before we go, if you see our title page here, X, I am posting on a daily basis on X, and I hope you are following me. If not, consider this your invitation. My handle is at Barb Armstrong CS. Mike Fairborn is riding shotgun in the chat, and he'll be answering your questions as we go along. And just know that he's on X as well, Mike Fairborn CS. I hope you'll follow us both. Know that we do trade a lot of options in this class in addition to carrying stock positions, and options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges with Schwab and not all will qualify. We use the paper money software application on the thinkorswim desktop platform. That's a bit of a mouthful, but it is a brilliant place to learn and make sure that you understand your strategies, have a trading plan in place. Now there are some nuances and differences. We discuss those as we go along, but the most important one for the trades we're going to do today is that short positions will never be assigned early in paper money. That can happen in a live account. And so, we'll discuss that as we go along. Know that we reset the account on Friday to 25,000. So we have reset the account. This is the first time we've started with 25,000. Every other year we've started with 20. Last year was our most successful, paper money year ever. But our max position size has stayed the same at 5,000. Our maximum trade risk or potential loss per trade has stayed the same at 500. And our focus is on short to intermediate time frames for our trades by and large in this class. Okay. And we're both trading stocks, that are uptrending and bullish. It's sometimes a shorter term trade. A trade with a target. We did one of those on Friday. And then we're looking at both bullish and bearish opportunities with options. And today I thought, we'd place some bearish trades, but so many of the stocks that I identified as bearish candidates are bouncing today. So we'd have to put conditional orders on all of those. So that's kind of interesting, isn't it? In any event, let's get out to the platform. We're going to have a quick review of what's going on. There are already some questions in the chat, and I'll respond to a couple of those as well as we, take flight in this, our second Trading a Smaller Account class of the year. So let me just shrink this for the moment. So when we look at the S&P 500, are we seeing, a support level here, around this 58.76 level? And I would say, yes, we are. The last year, was extraordinarily bullish, but we're seeing not only, has this 100-day moving average been acting as a support level, and actually this last 2 times it hasn't really come down here, but also this line here, where it's come down here now 3 times to that level and has bounced. So the bulls might look at things and say, hey, you know, we had a good year. Like if we make this a 1-year chart, and, you know, my year to date isn't helping us a whole lot. We're up 2.3% year to date, which is kind of nice. But if I come down here and say show price as a percentage, we can see that in the last 12 months, you know, we're up 26% on the S&P 500. So it's hard to characterize that as anything other than bullish. Now, the bears, and there are some people who always have the opportunity, you know, to see you know, the cup half empty, or to see possible trouble on the horizon. They could be seeing, well, could this be a head and shoulders setting up, which is a bearish configuration, but it hasn't followed through. So far, it's bouncing. So we'll just have to see. But, you know, the bears might have a little something to chat about there. Okay, let's move on to the NASDAQ. It too is bouncing up 1.5% today. And again, you know, when we look at this index over the last 12 months, up 30%, you know, hard to characterize that as anything other than bullish also. Now, if we, you know, come in a little more, as I like to say, up close and personal, and we look at this. Let me change my drawing tool. Some might kind of see a bit of a diagonal resistance breakout happening today on this index. And you know, that too is bullish. So far we're 2 for 2 on the bulls, right? Yeah. How about the Dow? Well, the Dow in the last year up more modestly, and it really pulled back. You know, in December, came all the way down to this 100-day moving average, which it hasn't seen, you know, since August. But it's come down, and you know, we have an old resistance, became a support level, broke through that, and now, you know, it's acted as a resistance level again. You know, will it come and break through? But this index up in the last year, you know, what, 9.5% with today's move, and it's up, you know, 0.75% so far today. And then the Russell, you know, up in the last 12 months at about 12%. So, you know, it's beating the Dow. But, you know, we've seen a little bit of consolidation and pullback here. So it's not as, you know, bullish looking a chart. Like some would say here, oh, let me change my drawing tool again, is a potential double top. And it did break through. It did break down, and that's a bearish sign. Like, by the way, I'm going to be teaching getting started with technical analysis this year, and we're going to discuss a lot of these price patterns. So there's our double top, and then it did break down. And so and a technician might say, I'm going to measure this distance, and this is how far I would expect it to go to the downside if it does break down. Now, these patterns don't always play out perfectly, but, you know, now it could be setting up a new pattern, you know, double bottom instead of a double top, and we'll see if it breaks back out to the upside. So we'll just have to wait and see how that plays out. Now, what about our volatility index? Our VIX. You know, it's sitting at 15, and, you know, so it's kind of in that range that it's been percolating about. So, like, no massive, you know, new news on that one. And if we come and we look at our sectors, you know, which ones have been leading the pack? And I had made a sector list, you know, for the last year. And these are the ones that have been leading over the last 3 months are, in fact, the sectors that have been strongest over the last 12. So, you know, we look at consumer discretionary, up 23% in the last 12 months. And, we've seen this kind of consolidation, and some might say, well, I'd be looking here for a diagonal resistance breakout. But, just because this index looks like this doesn't mean that there might not be some stocks in it that are breaking out. Communications was actually the strongest sector, and we are seeing kind of a breakout in this sector today. Communications, that's like the Metas and the Verizons of the world. And that technology, not surprisingly, has been pretty strong also. And this is a 6-month chart, but if we come and we look at a 1-year chart here, up over 40%, 42%, like that's not too shabby. And then financials coming in, also pretty strong, although it's had, a pullback in December. Okay, so there we have it. So let's go and start with Amazon. Now, we have got earnings coming around the corner, right? Right. And if you hover over this little icon here, it'll tell us the date earnings is coming, February 6th. And so ideally, if we wanted to place a trade on this, and this is another stock that has been performing well, although it did go through this period of consolidation with kind of this cup and handle pattern, broke out and came back to retest. But that's kind of now in our past, right? But, it came back down to the 30-day moving average, and we had this inside day. Now, had we been talking on Thursday, we might have placed a trade then, but, we weren't. So could we look at this and think that this trend might continue? And so if we look at this and say, well, can we come to the trade tab, and could we do something like a long call vertical and go out? If earnings is February 6th, could we go out 3 weeks and be out prior to earnings and do, say, the 225, 230? And with this strategy, we're buying a call, and in our case, the call is already in the money, and then we're selling a call to help fund the purchase to make it a little more affordable. And we want it to end up going through both strikes and ideally staying there. And, it's got $2 that it needs to move. When we look at Amazon, on an average day, it, over the last 14 days at least, it moves about $5 a day. So it's not that big a stretch to say, could this go through both of these strikes were we to put that trade on? And this is one of the ones that we were going to look at on Friday, and then we just ran out of time. So 225, 230, we'd be paying $2.63. Well, we don't want to risk much more than 5. If we did 2 contracts, we'd be at like 526. So we might say, well, that's okay. Now, our goal on these is to get out when we have either a 50% gain, or if the trade goes against us, a 50% loss. So we're going to take that 263 and multiply it by 1.5. So we'd want to get out. So we're going to make this a first trigger sequence, right click, opposite order. Say, hey, when this gets to 395, we want to exit the position. And you might say, well, but you're leaving $105 a contract on the table. Yes, we are. And, are we cool with that? Yes, we are. Because we're more likely, if we want to wait for max gain, we've got to be in this, chances are, till almost the 31st. What if it went up and, we could end up out of the trade in a week and just take a smaller return? Now, why aren't we doing an OCO order? Well, the reason is that there's sometimes volatility in the market, especially when the market first opens. And I've seen in my live account examples where I got nicked out for a way bigger than a 50% loss. And then when the volatility in the market settled down, we wouldn't have been out at all, but we're going to have to track this daily. Yeah, Jerry's saying, is there any concern making a trade before the Friday jobs report? Well, if the market's bullish all week, it's possible that we could be out before the jobs report. And the jobs report, who knows how the market will respond. And so, yes, we're okay with taking that, but, with recognition that there's risk in everything that we do, right? Right. So we're going to put this in our long call vertical group. Now, if you're new to this strategy, there is a Getting Started with Coaching series that dedicates a whole class to this. There's also an example trading plan. And, there's no guarantee that we're going to get out at this price that we've requested, but we're going to give it a shot. And so just let me show you the example trading plans. And if I bring up a new window, we want to come to, actually, we can just type in Trader Talks. And it will bring up a list, and it's brought me right to the Trader Talks from Schwab Coaching on YouTube. And the first thing that comes up is whatever class is currently being taught or the next class to be taught. And then we're going to come to our playlists. And when we scroll down, we're looking for trade management mini sessions. And the 3 example trades we are going to place today, we're going to do an example trading plan. We're going to do a long call with a 1 ATR target. We are going to do a long call vertical. So let me just, that one must be at the top of the order. View full playlist. So you can see that we've got a number of trading plans here. And so there's one for long call verticals, the trade we just did. We are going to do a 1 ATR trade, and we're also going to do a swing trade. And actually, I don't have a swing trade trading plan yet, but one will be added. By the time I'm done, we'll probably have 16 or 18 different trading plans. And as somebody's asking the question, how would you exit the trade at 40% rather than wait until it gets to 50%? And that's a good question. Let me show you one other thing while I'm off the Thinkorswim platform, and then we'll come back. There was a question in the chat saying, I would like to track my trades this year. And do you know where I can find a journal? So if you go to schwab.com/Schwab coaching, and then come down to live webcasts, you'll see the January schedule, okay? And if you click on today's class, Trading a Smaller Account, if you come to resources, there's a trading journal right here that you can use. And there's a couple of little trainings on how you might want to use it, okay? Yeah. Okay, so that's that. Now, coming back here to the mini session, somebody said, could you show me how to set up groups on the monitor tab? And while I can do that, I'm always trying to pack 10 pounds worth of material into a kind of a 5-pound bag in these webcasts. So what I did is, if you scroll down in these mini sessions, there's a whole bunch of short Thinkorswim videos. This one is on how to customize the monitor tab. And I go through how to set up groups, how to customize those groups, all that good stuff. It's 11 minutes long. So you might want to look at that, how to customize a watch list to look like the watch list that I use today, how to customize your charts, all that kind of stuff. And if there are other topics you would like me to cover, don't hesitate to, put suggestions. There's a survey in the chat. And so if you click on that link at the end of the webcast, like there's only 2 questions. One was, I hated it. 10 was, I loved it, and I'm going to keep coming back, and everything in between. But if you put a comment in there, my promise to you is that if you put a comment in there, I will read it. So will the management team. If you're watching in the archives, you can put a comment in down below. So if there are other topics you'd like me to do a mini session on, just let me know and I'll add them to my list. Okay. So now back to our regular programming, but this is why you want to subscribe to that channel. Okay. So that was our first trade. And then, I said, we're going to monitor these daily. It's like, oh, how much time is that going to take? Well, here we have 2 long call vertical trades. The one we placed Friday is underwater 25%. Oops. Okay. But is it 50%? No, then we're done. Amazon, oh, we've made $5. Woohoo. Yeah. Anything to do? Are we up? Are we close to being up 50%? We are not. But if we were up 40%, and then this number is positive and this number is negative, our profit and loss on the day, and it looks like it might be starting to pull back. If we wanted to exit the trade, we can just come up here and say, we want to cancel and replace this. And instead of getting out at 395, maybe we want to get out at 345. And you just come here. Let's see, let me have this fill the screen. So there's this disappearing, reappearing line, and you just say, I want to cancel and replace this. And then you can just unlock it. And if the current price on it is 345, say, hey, you know what? Hey, I still made a nice profit. I'm good to go. Okay. So that's it. We're going to put that one back in place. That's in our long call vertical group. There we go. Okay, so that was our first one. Let's go now and look at Square. That was another one that was on my list on Friday that we didn't quite get to. And Square, why was it on my list on Friday? Do you see what I see? Like here, we have a diagonal resistance breakout, and then it's following through today. But Square, it was kind of on the struggle bus in the last year, we might say. But we saw this big kind of cup pattern, right? Or if we look at an even longer time frame, kind of this big double bottom. And then it's broken out, came back to retest, and it's bouncing. And if we look at, as I kind of like to do, it's like, well, what are the analysts saying? Because, some people will trade based on sentiment. So we have Keefe, Bruyette, and Woods are lowering their price target to 100. Well, that's still higher than this, but lowering it, that's not so great. But then you have Raymond James that upgraded it with a price target of 115. Oppenheimer upgraded with a price of 115. And so I find it interesting, right? Like, can everyone be right? Absolutely not. But it seems to me this is more bullish, than bearish. And so, but we might say, well, could we do a swing trade on this and say, we just want to trade it until it goes back up to $99? Well, we could. And we could do that either with the stock, or we could do it with an option. And if we wanted to do it with the stock, what's the advantage of a stock over an option trade is that, we don't have time ticking against us. And so, if we look at this, we could say, okay, well, if I put in this target of $99 and I wanted to do this with the stock, where might I put a stop? Well, if you say, well, this recent low here, if I want to give it some room to move, 84.82 would be our recent low. And let's say we go 3% below that. So if I bring in my little calculator and say my stop would be at 84.82, times 0.97, 82.27. And you're saying, but you're paying 92. It's like, yeah, so we're risking over $1 a share. So, you know, $10. So if we're risking $10 and we don't want to risk more than 500, you know, how many shares can we buy? Well, we could buy 50. And if we say, okay, well, it's $92. If I bought 50 at $92, our max position size, call it $93, is 5,000. Is it less than that? It is. So let's go in and buy some shares. Okay. And we're going to make this a stock trade with a target. And our target is going to be $99. And so if you want to put this on your chart, this is how I do it. I just kind of draw a line close to where I want it to be. I say that's my target, and this is a stock position. And then say show that on the right. Can we be shown the calculator? The calculator it's a gadget. So if you don't have the calculator, you can come here and say switch gadget, and then you're just switching the gadget to a calculator. Switch gadget, there's calculator. Okay, so we're going to come to the trade tab. If your Thinkorswim screen is blurry, hit refresh. Hit your refresh. And Mike might have another idea for you as well, Neil. So we're going to come here. We're going to right click. We're going to buy custom with an OCO bracket because we're putting in both our target, and our target is $99. And so some might say, like, is it worth it? You know, to do this, like we're already at almost 93. Well, you'd be making what, $6.21 a share? So if we could make $6.21 a share and we divide that by our entry price of $92.79, like that's a 6.6% return. That's not too shabby, especially given we're not intending to be in that long. You know, it's a swing trade. And then our exit is going to be at 82.27. And again, if the stock were to gap down, could we end up out at a lower rate? Now, and others might say, like, why are you putting the stop so low? Like, are you nuts? Like, why would I want to risk that much? It's because I don't want to be stopped out, is the reality. Okay. So what are the probabilities of my being stopped out? Well, I'm glad you asked. Let's go look at that. It's like, well, where do I look at that? I'll show you in just a sec. So we're looking at buying, oh, do we want to buy 100 shares? That's a $10,000 position. No, we don't. We want to buy 50. Okay. Confirm and send. So we want to buy 50. Is it less than 5,000? Yep. So are we good to go? Yep. We're risking $10 a share times 50, about $500. Is that okay? Yeah. And we're coming down to our stocks with targets. Okay. And fire in the hole. Now our stop, we set at 82.47. So if we wanted to say, like, hey, by the end of January, and we would expect that this would come up, you know, by the end of January, right? This is January 31st. What are the probabilities that this might come down to $83 or $84? Well, here's our 83 strike on the option chain, and it's saying that the probability of it hitting $83 or $82, so make this 22, of hitting $82, we have a 15% chance of it being in the money, a 30% chance of of it touching it and triggering a stop. So we have a 70% chance or probability of not being stopped out. Where if you said, well, I want to put it 3% below Friday's low of 89.23, that would be almost 86.55. So let's look at the 86 probabilities. Now you have a 50 to 58% probability of being stopped out. I like that 30% probability better. So sometimes, we can end up, burning our behinds on this, but this is a good way to look at your stops and what the probabilities are. And of course, when you look as a technician, when you look at the chart, I'm looking at this and thinking, I have my stop loss set below this diagonal support line, which is one level of resistance, and below this horizontal support line, which is a second level of resistance. And both of these will hopefully, if it pulls back, catch square before it comes down and triggers the stop. Okay, so that's kind of the thinking that's going on in my little trader brain as I'm trying to analyze this and set up what, we hope will be a successful example trade. Okay, so there's square. I was going to do that as an option trade, but yeah, we get to a woman's prerogative is to change her mind, right? So let's come and look at Apple. And I know this is, a stock everybody's pretty familiar with, but if we look at this over, let's just step back before we step forward. And if we step back and we look at the last year, how has Apple done? Well, that looks like a pretty nice uptrend from 164 to 260. Like, wow. That's impressive, right? Even though it spent a bunch of time going sideways, up, over 30%. And it's come down to this 30-day moving average. And didn't come all the way back down to, when it was consolidating, we had this kind of cup and handle pattern, right? It's come down. The 30-day moving average seems to be acting as a support level. We had this candle, this doji candle saying, hey, maybe this pullback is complete. And today it's moving to the upside. So, could we look at that and say, hey, we've got earnings coming. It's earnings season coming up, like at the end of the month. But could we do something like a 1 ATR trade and say, hey, on an average day, this stock moves about $4.26, over the last 14 days at least. And if you don't have this on your chart, if you come to studies, edit studies, and just type in ATR, this stands for average true range. And if you want a complete definition, just click on the little question mark beside it and it will give you, it's basically how much the stock moves from the high of the day to the low of the day, that average over the last 14 days. Now I've already got that on my chart down here. So what do we do next? Well, we have to figure out what our target might be. And if we say, yeah, and there's two ways you can do it. You can say, well, I'm just going to go from the current price. We tended to be a little more bullish and say, well, if we look at today's high, and today's high is 247.33, and I'm going to switch this to a scratch a pad. And here is our 1 ATR example, and we're using Apple, where the 1 ATR on this is 426. And so our target on this would be today's high, which is 247.33. And you get that just from hovering over the candle and looking at the top of your chart. And we're going to add 426 to that. So feel free to double check my math, guys. 251.59 is what I got. Okay. And then our exit on this is going to be today's low, which is 243.20. And we're going to subtract 426. Okay. And that gives us 238.94. Now we always have the most risk right when we open the trade, because 238.24, that's, almost back at this line here. So, and the way we manage this, and if you go and look at the example trading plan, if tomorrow it goes up, but it doesn't hit our target of 240, what was our target? 251.59. So if we want to put that on our chart, we'll just draw a line and then edit it. And we'll make this 251 is our target, 59. I like to be able to see things on the chart, so that when I'm checking these, and how often are we going to check these? Every day. 1 ATR target. And we're going to show that on the right. So now we know what we're aiming for. And sometimes, like, it might get within, we had an example where it got within 15 cents of our target. And I think it was a trade on Apple. And we said, hey, we're going to take the money and run, cue the Steve Miller band. And so that's what we did. So how do we set this up? So tomorrow, if it's not at the target, we're going to snug the stop up to $1 below the low of the day. 251. Yeah, I had 251.59 because it's trading at 245. Okay, so 251.59. We're going to come to the trade tab. And then we want to come out, when we're buying an option, we want to come out a little further. Now, what's the challenge is that our at the money strike is out of our snack bracket. We don't want to risk more than 500. This is 630 to 640. And although we don't intend to lose any of it, we're doing this because we want to make money. We need to look at the first strike out of the money, which, if we lost it all, it wouldn't breach our position sizing rules. Okay. So we are going to click on the buy, and we're just going to click on buy a single. Why aren't we doing that OCO? Because this is just another way of putting in an OCO order. We're going to come here to first trigger sequence. We're going to right click opposite order. We're going to make it a market order that is good till canceled. And then we're going to click on this little disappearing, reappearing sprocket, and we're going to put in both our target, which is if this goes at or above 251.59, 251.59, or if we aren't correct and this pulls back, if it goes below 238.94, we want to exit the position. 238.94. Okay, we're going to hit save, confirm and send. And some people, even when they're doing something in their live account, well, maybe especially when they're doing something in their live account, they'll read it out loud. I am buying a call on Apple because I'm bullish, right? Right. Yeah, I'm paying $435. How much could I lose? All of it. How much can I make? It's saying infinite, but we're putting in a target at 251.59, correct? Or if it goes below 238.94, correct? And so we're going to put this in our long call group, and then we're going to put a note in from us to us. And again, in those mini sessions, there's a thing on notes and how to see them afterwards and all of that. That's our 1 ATR target and exit. All right. Okay, so that's Apple. We've done Amazon, and we've done Square. And we've done 3 different types of trades. Okay, so let's look, always the overachiever. Now, net was uptrending earlier today. and is now pulling back. But we have this cup and handle pattern. And again, in our getting started with technical analysis, these are the kinds of patterns we'll be talking about. It's come up, pulled back, and continuing to move to the upside. But because it's pulling back today, we might leave that, and come back to it another day. The same with Chewy, although Chewy, kind of bittersweet that we didn't do our example trade because it was just breaking out on Friday and it's gapped up. But if you wanted to, look for some examples to practice, you could do that. So Deepak had a question. Let me just scroll up and see if I can find it because we're almost out of time. Or could you type it in again? Should I not move within a day or two? Otherwise, we start losing the price due to time decay. On these 1 ATR trades, we have gone out, at least I hope I went out, to February. And the reason we went out to February, which is like over 40 days away, if we come to the trade tab, is because time decay is going to be a lot less. Like if I change this to our Greeks, we can see our time decay on this is, let's go to Apple. Our time decay on this is 9 cents a day, where if we looked at something, say January 31st, it's 11 cents a day. Or if we looked at January 17th, even though we intend to be out of this by the 17th, it's 14 cents a day. And those nickels start adding up. So snugging up the stop tomorrow, Jack, what it means is let's pretend this was tomorrow. And so we're looking at Apple. If we said, okay, so today's close, let's pretend this was the close, is 243.20. So I'm going to move the stop up to 242.20, $1 below that. Okay. And we are going to come to the trade tab, or our monitor tab rather, and we're going to see this call on Apple, and we're going to cancel and replace it. And we're going to hit on that sprocket again, and it'll say, well, this is the stop you had, 238. And you're saying, okay, now we want to move it to 242.20. So we want to move it up. And then the next day, if it doesn't hit the target, we'll potentially move it up again. Okay, so and this is in our long call group, and this is our 1 ATR. Does that make sense? Okay. So guys, that's a wrap for today. We did our 3 trades. And when we come to the monitor tab, one of the things that often comes up in surveys is, can you just review the trades we placed? So we did, all of these were bullish. We did a long call vertical on Amazon. We did a long call with a 1 ATR target on Apple. And then on Square, we bought 50 shares of stock, and we have a swing target on that. And so as we wrap up, here's my ask. There are over 500 people still watching live. 100 have hit the like button. If you would do me a favor, and if you found this valuable, if you'd hit the like button, it helps move this up in the algorithms on YouTube so more people can find this content. So if you'd hit the like button, like Cameron May says, it sounds like applause to us, but really it helps us get the word out. Second, follow us in the land of X. My handle, Barb Armstrong CS, and Mike's is Mike Fairborn CS. I recorded another mini session on the power of compounding on Friday. I'll post that on X as soon as it's ready, but you'll find it in the trade management mini session collection. And I'll probably have that one up at the top. And because it's unique, we'll give it a unique color. So it will stand out. So look for that. Subscribe to the channel if you haven't done that already. And I know I'm being a bit of a bossy britches at the end of the class. I will be gone until next Tuesday. I'm on a flight to Maui tomorrow. I will be drinking something lovely out of a coconut on your behalf. And soaking up a few rays, but I will see you when I get back. We've got great coaches filling in for me while I'm gone. And last but not least, please take a minute to fill out that survey. I do read each and every comment that you put in there. Thanks, guys. Have a really great day. And I'll see you in a webcast coming up soon. Bye for now.